So Elon Musk, and we all know who he is, basically is saying that commercial real estate debt is a very serious and looming issue for the future. And you know what? He is absolutely right. So welcome to Housing Bubble 2.0 News of the Week, or as I like to call it, another episode of As the Housing Market Turns. Today is the 3rd of April. Randy Patrick here, putting the realism back in real estate. Hope you're doing well. This video was brought to you today by our friends at Foreclosure.com. So if you want to check out the pre-foreclosures, foreclosure auctions, tax deed, distressed properties in your area, your zip code, your neck of the woods, go to gethousingdata.com. That's gethousingdata.com. That's my affiliate link, and you can see the stuff I talk about on a daily basis. All right, let's hop into the article right now. So very interesting. I've seen this bantered about the past week or so. I just wanted to catch up on it. So essentially, Elon Musk says the state of the commercial real estate debt market is by far the most serious issue looming out there, serious looming issue. So there was a letter, it's called the Kobayashi letter. I'm not too sure if I'm pronouncing that right. Newsletter which is focused on global capital markets, tweeted over the next 5 years that more than $2.5 trillion in commercial real estate debt will mature, claiming that's far more than in any other 5-year period in history. All the while, the rates have more than doubled. And guess what? The letter claims that only 60 to 70% of commercial real estate is occupied. So this is a major situation here. Why? Well, because we have, 2.5 trillion. It's resetting, so they got to refi. Rates are doubled. And when you have occupancy down to 60, 70%, that means income coming from those properties is less. And I would expect that the expenses from the properties are also up. So going to be tough and tight for a lot of different people out there. So refinancing these loans will be incredibly expensive and most likely lead to the next major crisis, they wrote on Twitter. As I said, the worst part, 70% of these loans are owned by small banks. So we've just gone through sort of the starting of a banking crisis. And again, a lot of the mortgages, residential, personal mortgages, are held and sold on secondary markets by various lenders, FHA, government, Fannie, Freddie, whatever. But the commercial real estate market, the commercial debt really is held by smaller regional or even city-type banks. You see, rapidly rising rates are teaching everyone a valuable lesson. There's no such thing as free money anymore. Again, we'll see a ripple effect throughout the economy from the bank crisis to a commercial real estate crisis. The Fed plays a major role. Meanwhile, the rates are still rising. So essentially, not looking good for the commercial real estate market as going forward now in the next 3 to 5 years. This thread elicited a response from none other than Elon Musk himself, who said, "This is by far the most serious looming issue." So please note that. He also said mortgages too. So I don't want to diminish that point. I think that point is very important. We are talking about commercial in this video, but he does make the point, besides the commercial real estate debt, mortgages too are another serious looming issue. So again, the guy's smart. The guy knows what's going on. He's out there, and he probably sees things a little differently than most people. But he's telling we got problems out there, right? He's not the only one, by the way. So essentially, the Fed is playing catch up to tame rising rates after its protracted gross mischaracterization last year of inflation as transitory and its initially timid steps to withdraw monetary stimulus. So again, the Fed misreading the marketplace. He's not a big fan of remote work, so of course he's got a vested interest in this. That's Elon Musk. He's claiming remote workers are just pretending to work and they don't work hard. Essentially, vacancy rates within the commercial real estate sector, because of the shift to remote work brought on by the pandemic, and that's our problem right now. Musk could have some skin in the game, fueling his worries in regards to the manufacturing of commercial real estate loans, or maturing of real estate loans, I should say, and the likely issue of refinancing. Yeah, because I'm sure he's got stuff happening that's going to cost him more money when he refinances. All right, essentially, what the letter is saying, that newsletter is saying that the Fed needs to cut rates ASAP and the government needs to back all deposits temporarily. Well, of course, we all want lower interest rates. We all want the government, i.e. the taxpayers, to back all of our deposits. Whether that's going to happen or not to fix our economy is yet to be seen. So this is a serious factor. It will It's already having ripple effects in the economy. And now when companies are calling people back to work, and if they're not going, they're either moving or losing jobs, or relocating to different companies and firms. Again, these corporations that are in locations like in New York City, San Francisco, LA, like a lot of these locations, the downtown sector is becoming a bit of a ghost town because it just doesn't make sense to pay these high rates, well, not interest rates, but high, rates for occupancy, right? As a tenant, when we're in an economic struggle right now. So I want to point out, this is kind of interesting. So back in the day, if we want to go back in the day, which really is, 2006 was our previous housing bubble value peak. Obviously, we know we had a crash and a correction, but if we go back to 2006 and everything started to kind of implode from there, well, we had what? The mortgage meltdown brought on by the subprime mortgage crisis, fueled, of course, by cash out refis and equity stripping. We all know what happened there, which brought on the housing crisis. Okay, housing crisis going on. People were losing their homes to foreclosure, short sales, etc., which spurred a financial crisis. And then as a result, because of the issues happening in the marketplace, we also had a smaller commercial real estate crisis. There were many, many locations you could drive around town where you saw tons of vacancy signs on office buildings, on strip malls, in shopping malls, everywhere. Smaller, commercial building and establishments, etc. Everyone was hurting, and then we had what's called the Great Recession. The whole broader economy sort of went belly up, and that's where we were at until we started to recover. So that's kind of what happened last time through 2008 to 2012, coming out of it in our recovery. Well, if you take a look at what's going on now, it's kind of the same thing, just a couple, so maybe a little different process, or different, we'll call it different way that everything's getting played out here, right? So inflation, we've had inflation for the past couple of years now. It's only getting worse. We don't really see much. I guess you could say things slowing down, or as far as prices becoming less and less or cheaper, right? Which now we've gone through a financial banking crisis. We're in that right now. We've seen a couple of large banks go under. The Fed has had to step in and do some bailouts, essentially. We can't probably say that word bailout, but that's what really has been happening. So we've got a banking crisis. Now we have a looming recession. So either we're in a recession or one's about to happen. Now, again, I'm not an economist, but if you do your little research on the internet and read lots of stuff out there by other economists, yield curves and GDP, all the signs that point to a recession are already here. Whether the powers that be are copying out to it or not is a different story. But the point is, we're either in one or one is essentially imminent, right? Now, we're talking about a commercial real estate crisis because we know that what's happened due to the pandemic and the relocation and remote work, and that kind of shift and where things are happening in the commercial space, we're now seeing it's changing. So some locations in the country, like say in New York City, like a San Fran, like in LA, the real big cities are probably going to experience a lot of pain with respect to commercial real estate. Just the way it goes. There's other things that contribute to some of the slowdown in commercial real estate, but again, it's an overall type situation, right? And we're working through now what we call a housing correction. We have an affordability crisis. We're going through a price correction, and again, it's up for debate. And you guys know where I stand on this and where things are going. I'm already working through that right now. We're going to have some sort of crash, correction, crisis, whatever. So we are having decreases in property values. The foreclosures are mounting. They're not even here yet. They're not even part of the marketplace yet. They're still coming. We have people that are out there changing the narrative, saying, "Oh, the market's already reached its bottom. It's rebounding." Listen, a week or two of low interest rates is a short-term, let's feel good about it solution. It's not the long-term view and long-term look. We had the other day, what was my last video? Robert Schiller basically saying, guys, wait 6 months if you want to buy. Things will probably be different. Okay, read between the lines in what he says. All right, so this is the guy who co-created the index that tells us where values are at. He's got all the data. He knows how to look at it and read it. He's telling us don't buy anything for 6 months at least, unless you have to, I guess. And yet you got other people saying, "Oh, we're over the downswing and it's going to get better." I don't know. You figure it out. But the difference is that, it's all kind of there, that the pieces and the players and the issues are there. Listen, it's being implemented, or it's just coming out. it's structured a little differently than it was back in the 2006, 7, 8, 9 time frame there. So again, it's happening, but just a different way here. And everybody, please, if you enjoy the information in my videos that I produce, if you could hit that subscribe button and help my channel grow, I'd really appreciate that. And if you are a subscriber, if you could please hit the button again, because I lose subscribers on a daily basis. It's one of those things that happens behind the scenes. And by the way, last video, we had a ton of people subscribe, so I do appreciate that. I really do. So thank you very much. All right. Now, interesting enough here. So I thought I'd add this little article in because it tags on to Elon, making some commentary about the commercial real estate debt issues. Well, 3 of the 5 richest people in the world are making new plays in the real estate market. So again, when does this happen? Okay, people look at value when we're going in the trough. So when market prices are coming down, like it's the very simple concept, right? You buy low and you sell high. So you've got a bunch of people now, besides all the hedge funds and REITs and large investors, other corporate buyers that are coming into town and buying up whatever they can or waiting to for when things get lower in price point and value. The 3 of the 5 richest people are making their way in this marketplace. So it should come as no surprise that they're already kind of vultured on this. So Warren Buffett, basically, he's betting on a strong housing market recovery. He purchased 1.25 million shares in Louisiana Pacific Corp. That he's suggesting that the housing market has bottomed out. They have a 7% stake in the Home Building Solutions Company. Basically, his track record of successful long-term investing, his bet on the housing market could be a positive sign for the sector, the broader economy, and individual investors, since new companies have made it possible to gain exposure to the real estate market with minimal capital. Okay, so this article is suggesting that the housing market's bottomed out, not necessarily just because he invests in it. People are gonna invest when they see it at low points. Whether it's actually bottomed out or not is probably up for debate. So that's Buffett. Jeff Bezos, no stranger to investing in the housing market either. He backed a company that allows investors to purchase shares of single-family rentals in up-and-coming neighborhoods for as little as $100. Okay, so basically had other investors purchase properties with the highest appreciation potential, which are then listed online, where non-accredited investors can purchase shares with a single click and passive income through rent. Well, what they're doing is what's called it's like a equity sharing. What they're doing is most likely doing the tokenization of real estate. So you're able to go in and for $100 buy a token or your little share of an appreciating house with respect to cash flow and appreciation, etc. So this allows as I said, the non-accredited investors to come in with minimal risk, but lots of people have $100, not many people have $100,000, you see. So again, this is what Bezos is doing, and again, we are involved in that tokenization stuff as well, too. We know how to do that. The next play, of course, going back to the 3 of the 5 richest people in the world. Guess what? It's our friend, Mr. Musk here. So basically, he's partnering or could be partnering with the construction firm Lennar to build a residential area for employees of his company. So that's kind of the thing. So the trend the past couple of years has been build to rent. So you've got these hedge funds, REITs, these large buyers coming in to work with the home builders saying, hey, build us 100 homes. We'll buy them all for you, certainly at a reduced price point, and we'll rent them out or make them our own community. So if you're a builder and you've got capacity and time or the potential inventory sitting there, why not do this? Now, of course, if you're building 100 plus homes for a single buyer, clearly price points will be great and you've got a lot of economies of scale. Guys like Elon, he can build a community that's going to support his employees. And it's almost like, I don't really call it socialized housing, but it makes sense because it's kind of like, hey, we're employing you, we're giving you these benefits. One of the benefits is living in one of our homes. I'm sure they're going to do this on a rental basis or something that's attractive for both parties, or either it's a reduced rate, but he's still making money on this. So it's one of those things that, you're offering these solutions to your employees, which will attract them better quality of life and make them stay longer. So good value, simple as that. So just 3 well-known, highly wealthy people that are participating in the real estate market. This is just the starting point. We're going to see more of this. People know when to buy real estate. So again, 2008, as things were crashing, it troughed in 2012. If you were buying in 2012, if you bought a property, you pretty much more than doubled your money with where prices are at today. So again, all these groups and people, same thing. They're preparing for the downswing where they can buy and then they've got value, whether it's on a cash flow basis or on an appreciation basis, as we come out of this over the next 3 to 5 years. So that's the scoop with respect to what's happening. I just thought it was interesting that Elon was putting some commentary out about that. The fact that, yes, he believes that commercial debt is a serious problem, and oh, by the way, mortgages too. So we're not out of the woods yet. We're not even at the start of some of the issues. We're at the very tip of some of the issues right now. So it's only, it's not, is it going to get better? Is it going to get worse? Depends on your perspective. Depends on where you live and how things play out. So there you are, guys. So once again, thank you for the views, likes, and comments. Please share the video with your family and friends. If you're not a subscriber, please subscribe. We look forward to speaking with you in a couple of days. Take care.